Happy Friday, everybody. This is Matt Ellis. I'm founder and CEO at Measurabl. I'll be your moderator and host today for the webinar on data quality. I'm joined by two other experts who I'll introduce in just a moment, who will be taking us through the presentation. First, a few ground rules and logistics. Presentation is scheduled for about 45 minutes. We're going to leave, ideally 10, maybe 15 minutes for some Q&A. So please go ahead and use the sidebar of your webinar application to enter your questions. We'll be receiving those on our end. The goal today, and let me just try to set the premise here in a few minutes. And by the way, this will be recorded. You will be able to fetch this online. So if you're showing up late, no problem. All the information will be here for you. So what's the goal? And what are we trying to talk about today? Obviously, the issue of data quality is front and center, but we want to make sure that we talk about that today in some specific boundaries. This isn't data quality for financial reporting. It isn't data quality for your sports statistics. This is data quality around ESG, environmental social governance, commonly referred to as sustainability. And we're specifically talking about it in the context of the built environment, buildings, in particular commercial assets. Well, that will really be our focus point in discussion today. The folks that have joined us on the call in order that they'll be presenting. The first is Tim Porter. Tim is with a fabulous company called Urjanet. Urjanet is in the business of fundamentally procuring utility data directly from utility service providers. They provide a rich set of analytics and APIs and other protocols for fetching that data and transmitting that data to applications like Measurabl, our business. Tim will share a bit of his background when he gets going, and more, of course, on Urjanet, what they do, and his opinions on the market. The final presenter for today, and I'll be kind of in the middle of this and introduce myself last, is Jaxon Love. Jaxon is the sustainability manager at Shorenstein, a large and well-regarded, prestigious ownership of office assets here in North America, US. And Jaxon is probably, I would go out on a limb here, Jaxon, and say you're one of the most practical and thoughtful individuals in the market when you think about taking sustainability and sustainability data, and particularly applying that to the business to drive some outcome. There really are many people who do it better, or I think with better ROI than Jaxon. So that is why he is here. In particular, he's done a lot of work around data quality assurance and really looking at the quality of the information he's providing to his team to drive those decisions. So Jaxon will be presenting last and providing us some case studies. My name is Matt Ellis. I'm founder and CEO of Measurabl. Measurabl is an enterprise sustainability data management company. We focus on the built environment, collecting, managing, and reporting data. We're very, very interested in, and you've probably heard a lot from us around investment grade or other matters related to data quality. So what we're going to try to accomplish as we get going here is talk about with Tim, where does data come from? How do we actually get ESG and sustainability data? What is that? Let's define it. Talk about the techniques for getting it and for quality assuring it, and some of Tim's thoughts on best practice there. And then we want to kind of open the aperture a little bit. Sustainability is a big topic. It cuts across so many different aspects of the operational, the financial, the brand, reputational, risk management side of our business. It gets into how we procure capital, how we procure debt, and also how we can underwrite real estate transactions. So it just has so many applications. And we want to really understand that and put it all in context, because data quality affects every piece of that value chain. There's something that you'll hear us say today, maybe from time to time, which is the data chain of custody. It's this idea that sustainability data does in fact originate from some basic level in our portfolios, typically utility meters, some manual entry around asset level details, and that it then gets aggregated, right? It gets built into asset level information that includes certifications and ratings and projects, all sorts of building attributes, and those things provide context. If we're wrong on any of that, it's garbage in, garbage out, right? It takes very little to take a good quality of utility data and turn that into bad and non-contextual information because we don't know the right square footage of the building or what type it is, for example. So I'll be talking about that, and then Jaxon will be able to deliver us some case studies and take us through the practical aspects. How do we actually use this? Where does data being bad hurt us most? Where does data being good help us? So with that, what I'm going to do first is pass to Tim. Tim, if you would kindly go ahead and take us through a few slides, talk about how we get data, what it is, and your thoughts on best practice.
Great. Thanks, Matt. I really appreciate that. Just by way of introduction, again, I'm responsible for our partnership organization here at Urjanet, and love the work that we do together with Measurabl. And they have us go first. I think it makes sense because we're sort of the plumbing that's behind this this system of being able to make really good, insightful decisions and take great actions based on knowing the right things. We're not really any good to anybody unless what we're providing is getting in the hands of someone who can do something really intelligent with it and have tools to do that. But it does start, as Matt pointed out, with making sure that the data that's being used and acted on is accurate and is something that you can trust. Because really building trust within the organization, especially as you're trying to build within your constituency a notion, kind of an ethos of sustainability. Trust is something that you're really trying to establish so that you can have people on board with everything you're trying to do from a sustainability perspective. And I'm going to go through a handful of things that we've seen and heard from customers that have had an impact on their efforts to ensure that the quality of the data is trustworthy, is something that they can rely on. And the first one may be the most obvious, but it's actually probably the one that is least taken advantage of at this point, at least from the standpoint of how many people we've heard that are still having to do it the old-fashioned way of manually entering the data. And that is just to take humans out of the equation, or at least a part of the equation that could be handled more efficiently, more effectively with software. Majority of the data quality issues that we've seen are caused by simple data entry errors made by people manually entering data from a spreadsheet or from an invoice that they're looking at. And collecting the data that's required for sustainability in particular is a really consistently repeated process. It's really ideal for automation. People have been removed from assembly lines wherever possible for many, many years for lots of reasons, including efficiency and safety, but certainly not least of all for quality reasons. And you can consider ongoing data flows within your organization just another type of assembly line. So the same reasons would apply here as well. Automation can certainly speed up collection of data for sure. And though I'm not sure safety is a real concern, I don't know that anyone's gotten hurt before in the process of manually entering data, but automation definitely helps improve the quality of the data that's being collected. I've actually heard from several companies that their manual processes actually involves entering the same data multiple times, effectively doubling or tripling the chances for errors happening. Having facilities managers start by entering data from their utility invoices for their buildings into a spreadsheet, and then emailing that spreadsheet to a team of people who entered the data from the spreadsheet for all facilities into the actual reporting platform. So taking these human hands out of the process and replacing them with software will definitely reduce the number of mistakes and let those human hands do kind of more meaningful tasks. So that's one way that helps improve the quality of what you're doing. A second thing that can greatly help.
And I should have said earlier on, we all agreed that we would sort of interrupt each other and try to be somewhat conversational as we go through slides. So I wanted to hold you on this idea because, and maybe do a thought exercise, right? Everyone on this call knows that I think when you talk about the E component, environmental component of sustainability and ESG, right? An essential stream of data that underlies that whole thing is utility data, cost, consumption, perhaps also demand, charges, rates, tariffs, other aspects, taxes of this utility data stream, right? And Tim's absolutely, you're right. The historical approach was that we would type this stuff in particular here in North America, the EPA Energy Star, right, where we would get some benchmark out. And I would love everyone just to kind of think about this because I know it seems simple, but think about staring at a utility bill. Now imagine you're Jaxon and you own dozens and dozens of assets in different markets. Those are different looking utility bills. Each one of them has a different format. It will provide maybe district energy in one market through steam or chilled water, electricity in another market, different units for all that, and different types of consumption and sources. Now imagine what happens when that's the truth on every bill, every month, for multiple types of service to multiple buildings. And that's, Tim, I think the thing that you're describing is where can humans be problematic is in that world. But there is an upside to humans too that Tim and I and Jaxon talked about preparing for this, which is that they know and have context. Sometimes they can look at consumption or a bill and go, that's just not right because I know other things that occurred at the building, leasing behaviors, renovation behaviors, that may make us feel good about the data, where a machine could conceivably say that's wrong just on an absolute basis. So any thoughts you have about that, Tim? But hopefully some of that is useful and makes sense to everybody.
No, I think.
Yeah, and this is
Go ahead,
Jaxon Love. I might, if I can, just build on that point for another minute here. So, what we like to think about is minimizing the gathering of data and maximizing the analysis of data. And to Matt's point, giving the humans the time they need to make sense of the data and take action on the data rather than collecting the data.
Yeah, I think that's exactly right. There's an element of this that the human being will always be most suited for doing, right? But there's also a tremendous amount of this data that could be done for them to make what they're really smart at doing something that they have more time to do. We always joke here at Urjanet, we've got lots of bills running through our platform, and we see bills sometimes that are over 1,000 pages long, and that is mind-numbing for anyone to have to spend really any time combing through and identifying things. So we'll actually talk in some of these future steps here that I'm going to go over how the human person actually can really make use of additional tools to help ensure the quality of what it is that they've been given by some automation with, validating anomalies. And it may be that the data is accurate, but there may be some anomalies that are going to show you that the utility wasn't telling you the right thing. So I think those are all really good points. So remove the humans where you can and try to take the kind of the assembly line approach and get them, doing the smart things, not the really, mundanely repeatable things. Another important thing that can greatly help with ensuring the data quality is to have some kind of framework to audit what's collected. So we've talked about kind of getting the data. What do you do once you have it? One of the first things that's good to do, regardless of how it's collected, is to have some kind of framework that checks things, especially when you're collecting data manually, but even when you're collecting through automation. Auditing your data before putting it to use is always a good idea. And to do this, you've got to know what things to check for. You can always add more checks as you go through doing this month to month and report cycle to cycle. But there are some pretty standard symptoms of bad data that you can always look for. And one would be new meters. That's a good thing to check for. If a new meter ID comes across, it hasn't been seen before for a facility. That could indicate that a mistake's been made somewhere. New tariffs or new charges could also be good indicators that possibly some mistake's been made, or for maybe that one building might mistakenly be having its data used for another building by accident. Because tariffs do change from time to time, and new charges can show up. You might have an ice storm fee that shows up this month. Probably had lots of those this season. But knowing that something looks different will give you a set of red flags that can be investigated and ensure that something isn't incorrect. So another one, spikes in consumption. Spikes in consumption are also good things to check for. Missing a zero is only a single character mistake, but it can give you data that's an order of magnitude wrong. So my dad always said that doing something almost right really only counts in tiddlywinks and hand grenades, and knowing what things to check for helps you ensure that what you're using for your reporting isn't just almost right. So I think that having an auditing system and thinking through what you need to check for is a really important thing to do with the data as well after it's been collected.
Tim, good points. Just to kind of provide some color as well on this stuff, when we, Measurabl's role is between data procurement and organization and the client, right, the end user. And their perception and the reality of the noise underneath that is where we live, right? And we can definitely say and affirm Tim's point that utility is just incredibly noisy, and for lots and lots of good reasons, unfortunately. But let's just go through maybe some of the fun ones that occur that create chaos. Utilities commonly restate data. They will misbill the end user, the consumer of energy, and reissue that. And they'll do that kind of whenever they darn well please. And to reconcile those two things is exceedingly difficult and requires automation. So just one example, gaps and overlaps in the bills occur for that and many other reasons, including some of the ones that Tim has listed on this slide. And so when it comes to things like using anomaly detection techniques to check variances in data, there's something actually much more fundamental that actually has to occur. You have to check the existence and the nature of the data itself before you can really render any opinion on, is consumption high? You have to know, do I have 2 out of 3 months of data, or just 1 or all 3, right? That starts to make that total consumption a lot more understandable. And then you can have an opinion on whether or not it's high or low. But running anomaly detection on just high or low doesn't make sense unless you also have the underlying mechanics down, I think is the point here.
Right. That's exactly right. The auditing is,
good ideas, Tim. Keep rolling.
Yeah, the auditing framework really does kind of provide you those mechanics. But this next point here with using data analysis gets to the letting the smart people do the smart things as opposed to forcing them to do the mundane, repeatable things. And if you've taken the time to define a framework to audit and check data as it's coming in, you've taken the time to try to automate gathering the data that you can, it's really through using data analysis tools that you can really scale the identification of anomalies. Going back to our assembly line analogy, my dad actually used to work on a tomato canning line back in high school. And he told me that as cans were being filled and routed down the conveyor belt for packing, what they'd do is they would sample a can every couple of dozen crates or so, just to make sure nothing had gone wrong. A label was put upside down or something like that. And without data analysis tools, you might have to rely on the same kind of spot checking kind of approach as well. Consider the example of a 1,000-page bill, right? You might check every 50th page and it still take forever. With analysis tools, you can check every can as it goes down the line. So if you've automated the aggregation of the data, you can ensure the accuracy of the data, but that still won't always help in catching anomalies in that accurate, and I'm doing this with my fingers, in that accurate data. So the more you're able to visualize the data, the more easily anomalies can be identified. So especially when you can stack that data up across a period of time or across a similar building type or across a specific season even, that really can help identify anomalies in a very, very visual way. And it's with those analysis tools that you're able to do that. Does that make sense?
It does.
Great.
The next one here too, Tim.
Yeah. So another tip that we have seen really bear a lot of positive results for people may seem simple, but it actually has some really good basis to it. And that is just to collect the data monthly rather than all at one time right before the reports are due. I'm sure everyone's done that kind of cramming to get things finished before deadlines. I try to get my kids to review materials throughout the month in their classes rather than cramming the night before the test. And besides reducing stress, it helps them make sure that they're filling holes in what they don't know as they go, rather than trying to learn a giant gap in knowledge, in one really, really late night. And with sustainability data, same thing holds true. It's a lot easier to collect and to audit and to review the data every month rather than doing it for a whole year's worth of information all at the very end. And this is especially relevant for folks that have lots of portfolios, as you mentioned, Matt, before. So, other than maybe waiting to drop your tax bill in the mail until the very last minute, I'm not sure that there's ever a scenario that procrastination is the best approach. But when you've done all the things we've talked about with automation and auditing tools and analysis tools, it actually makes it a lot more feasible to do this monthly. And that might have been one reason that people didn't do it before, because there was so much work going on just to get the data and to check it. So, when you're hunting down invoices and passing spreadsheets around, this is a little more difficult to do each month. And a side benefit of doing things monthly is that you get some insight throughout the year rather than sort of waiting for that report card to show up once the semester's over. That's not the least anxious day in the porterhouse for sure. So doing it monthly can really help out in a lot of ways.
Yeah. Tim, let's spend some time here, because this is a fascinating aspect of data quality. When I think about data quality, I think about really three vectors or three areas or criteria here. I think about completeness of data. So let's presume we've got some building and we have 12 months of data on it. Data being broadly writ, utility data, transactional data, occupancy data, right? 12 months. So completeness would mean we have 12 out of 12 months. When you get to 10 or 9 or 6, it starts to be very difficult to make objective statements about that building's performance. You don't have enough data, right? So that's number one, is completeness. Number two is accuracy. These are things like, this reading is very high or very low in the sense of utility data. This occupancy is very high or very low. Do I trust that particular reading? And can I audit that and change that to be realistic? So accuracy is a lot about variability and trustworthiness of any individual data point. The third component to data quality, and in my opinion, is timeliness. So one of the big problems in the market is that ESG and sustainability data is very commonly reported on an annual basis. That's backwards looking, and as Jaxon can probably attest, he's bought and sold 3, 5, 10 buildings in that period of time. So a statement to an investor on a portfolio, an ESG or sustainability statement that's a year old, right, is not always very helpful. And so improving the fidelity of timeliness, going from annual to monthly, now that starts to tell a real story. It becomes, I think, it moves from informational to operational. I can't really say a lot about a portfolio of real estate. If I look at it in annual snapshots, I can start to say and do stuff if I have monthly data. Jaxon, I believe, also uses some real-time data capture techniques behind the meter, pulse and interval data that he might talk about, to get proactive data, predictive data, what might happen or where are the errors in real time, right? So that's yet another level of data fidelity. And you can see that we're able to improve decision-making and react as we improve that fidelity. Now there's costs, right? It gets more expensive as you move downstream. One, you can do manually in terms of annual. The second, you're really gonna have to automate that. That's monthly, there's an expense. And then when you go behind the meter, you're using sensors and hardware, right? To get that level of visibility, got to make sure the cost benefit's there. But hopefully that makes sense to everyone. Is timeliness, completeness, and accuracy. And on this slide, timeliness, I think, is one of the most critical in terms of understanding sustainability performance in the moment.
Yeah, I totally agree with that. And I really do think a lot of the reasons that people haven't done more kind of periodic, giving themselves more periodic visibility into the status of things of each of their buildings is because it's something no one wants to do. And if you're doing it with kind of bubblegum and baling wire, and you're taking lots of time and lots of effort from a lot of people, then it's harder for that to be done and repeated, or convince people that it's worth doing each month, right? Because they may not be the ones that are seeing the benefit from having that visibility, but they're the ones that have to do all the work. So, if you can do some of these things where we're trying to make that data feed just something that automatically shows up, it's no harder to do that every month as it is to do it. Actually easier to do it once a month than it is to do once at the end of the year. So Now to your point about completeness, that second vector I think that you talked about, that's the last thing I wanted to bring up. It's really helpful to try to do some things to ensure that your data is complete, not just accurate, as Matt said, but actually complete. And data with gaps in it is inherently low quality. So if you miss a month or two in the data for a facility, you're not able to accurately represent that facility. If you're getting consumption for your main meters, but you're missing separate readings that might show up on a wacky bill that has things broken out, with lighting as a separate reading or measurement, or irrigation meters separate from the rest of your water meters, your data isn't complete if you don't have all of that. So your reports can't be accurate if you're missing some of the data. Again, tiddlywinks and hand grenades, right? Almost complete should not be your goal. So all these prior steps should help ensure that your data set is complete. You can implement algorithms in your auditing process that have completeness as a really key element of what it's trying to check for. If you have an irrigation reading for a location every month except for one, then the right automated checks in your audit system can check that, can find that, and help you fix it before it falls through a crack. Or looking at graphs in the analytics tools that we talked about that shows monthly numbers plotted over time will make missing data really, really easy to spot. So all these things that we're talking about can help ensure the completeness of the system. So these are just some of the things that can help avoid having your sustainability reporting data be tainted with bad information. And, bad information really can come with some pretty hefty consequences. I know Matt and Jaxon know this way more than I do, having worked with so many customers, and Jaxon doing it on your own specific buildings. I'm sure that you've seen lots of examples of this and can speak kind of firsthand to some of the troubles that it can really cause.
Yeah, thanks, Tim. So let's do that. And my goal right here, this is Matt, is I want to kind of skip one or two of my slides. I'm really anxious to get the baton to Jaxon here, because that's just the reality of the information we're providing. He can really bring it to life. So the couple points I'd like to make is at this moment in the presentation to step back. Okay, we've talked about procuring and some best practice around procuring utility data, which is an essential ingredient in the soup of ESG data or sustainability data. It powers the environmental aspect, in particular, of E, S, and G. But when we talk about sustainability in the built environment, we're talking about assets, we're talking about portfolios, we're talking about the stakeholders in and around that. These are occupiers who lease the space. These are lenders who provide debt. These are investors who provide equity. These are insurers who provide insurance against calamity and events in the asset life cycle. What is really cool these days about ESG is all of them care, right? And because they care, they're all blocked from doing their job in terms of discriminating against one building to lease from versus another, or lending at a preferred rate like Fannie Mae and their green loan program, or insuring at a lower premium like AIG. They can't do that if they don't have trustworthy data. This is this concept of investment grade data. So the slide that we're going to navigate to says the costs of bad data. And we've had a little bit of delay as we flip through this, everyone, so please bear with. But the costs are very real. There's a cautionary tale out there that's happened now to multiple companies where the information that they presented in their non-financial reports, aka their sustainability reports, was perceived by investors to be material, but it was not disclosed in their financial reports, and a lawsuit occurred. All right, so this is the state of the art now, where investors, pension funds, sovereign wealth funds, folks who move billions of dollars into real assets are taking this data serious enough to move their money from one portfolio or one ownership to a different one. And in that world, data quality and trustworthiness is more essential than performance. So I'll say that because that might be somewhat provocative, which is we've been for a long time concerned about how well a building is performing relative to another, or in the world of GRESB, how well a portfolio of assets is performing relative to another. That performance is absolutely meaningless if the data going into it is not genuine, right? And so when you bring the capital markets to bear, and they're going to make a $100 million loan on an asset, the very first stop is, do I believe the statements this building is telling me? You might think of this as kind of a FICO score, right? Is the credit good or bad? And I think that is very much where the market is moving to, and we have great conviction about quality of data and investment grade. The costs now today are very real if we don't get there. But the upside, right? Let's not talk about just the cost. Let's talk about the benefit for a moment. The benefit is also very real. If leaders like Shorenstein can demonstrate that they have high quality data and are conveying the whole truth, nothing but the truth about performance, and ESG is a value driver of real estate, they can attract more capital. They could get preferred terms on their debt. They could get lower costs around insurance. And this is really, I think, where the market is reaching to. And you're seeing the elite ownerships like Shorenstein position themselves there, right? The older story on this was I could have a more attractive asset for tenants. GSA, General Services Administration, which is an arm of the executive government, has a stipulation that they will only lease from LEED certified silver and above assets with some exceptions. That's the second largest tenant in the country, right? So if you're in the business of attracting tenants like the GSA or like Google, Bank of America, Apple, or any of the leaders out there, they will not lease from you if you don't have a high performing asset and they can trust that claim. Okay, so there are real benefits to positioning yourself out there in the marketplace as a high quality asset, and sustainability is simply essential to that. So Kaylee, if you could advance maybe one more slide for us here, and I'm actually going to ask you to go one more slide forward, which is how to use ESG data. And Jaxon, I'm going to make a few points and hand it to you here. Disclosure is a big piece of what I talked about here. We're going to think about the different entities that use sustainability data. Back to our data chain of custody, you've got some engineer or some property manager. They might actually turn a wrench or investigate a space in the building because they've seen operational issues in the asset. And that's your classic, there's a leak, or there's a vacant space, or the renovation of the project we did didn't deliver to our expectations, and we're going to do something about it. So you move up the food chain to where Jaxon is often sitting, right? It starts to be about that in the context of a portfolio of assets. All the projects done, all the certifications achieved, all the utility consumption operational profiles, and we're looking to optimize the portfolio around that. That data then gets aggregated once more and sent out to investors. Those investors are going to allocate or not allocate, insure, not insure, lend, not lend, based on these types of things. So that's that disclosure chain. To whom are we sharing this information? What will they do with it? Second piece is benchmarking. Real estate is just a highly competitive industry, increasingly so, and recessions even more so, because it's all about how can we fight for that one tenant out in the market. And we want to make a claim that my building is better than the other, right? And we would traditionally do that by showing a better lease rate or some better amenities. Now we're using ESG and sustainability. We need to be able to say this building is better than the guy across the street in terms of sustainability, performance, health, and wellness is now becoming a factor. And of course, the operational improvements underpin all of that. So hopefully that provides a step back about data quality in context, why it matters to certain stakeholders along this whole value chain. Jaxon, I would love for you to take over at this point, start to talk about what the real world looks like when you use and apply this data in this concept.
Great, Matt. Thanks a lot for teeing this up, and you've set high expectations for Shorenstein here. So thank you for the very kind introduction and points that you've made. So what you're saying about disclosure, about benchmarking, and about improving, those are right on target. Those are key factors for me and my role. And what I was asked to do here was provide the real estate owner perspective on the value of quality sustainability data. And so to share a little bit of what Shorenstein has done and what we are doing going forward, to ensure the data is accurate and valid, I want to first touch on kind of where we've been, and then talk about where I think we are seeing things go. And just to in the interest of transparency, we do work with Measurabl. Happy with the relationship we have there. This is not an endorsement of Measurabl or Urjanet as particular vendors. There are a number of service providers out there who can provide these data automation services that we've been talking about today. But the point being that we're talking about very large data sets in sustainability at the portfolio level. If we're talking about a large portfolio of buildings, sometimes multiple asset types, be it office, multifamily, industrial, et cetera. We're in the fortunate position of being office only, so we're looking at one product type, but we're looking at well over 100 buildings in our portfolio, and you can extrapolate that out to number of meters. It's a lot. So just to quickly give kind of a story of where we've been. So Shorenstein set a goal of 20% in energy reduction by the year 2020, and this was in the context of the Department of Energy's Better Buildings Challenge. And when we set that goal, we didn't really know how we were going to get there. It was an aspirational goal. It seemed like a far enough time out that we could figure it out as we went. And we did set about figuring out how we would track this goal. And so flash forward, if we can move to the next slide, flash forward to last year, 2017, we were very pleased to announce that we had hit our goal, 20% energy reduction, 4 years ahead of schedule. And the primary driver for this was the old adage of you can't manage what you don't measure. Well, we started measuring using Energy Star Portfolio Manager, which is the kind of the starting point, as Matt mentioned, for ESG data collection, at least here in North America. And in terms of dollar savings, as a result of this reduction, we estimated that on an annual basis, because these savings accumulate year after year when you retrofit a chiller or you replace a lighting system with higher efficiency lamps, those measures accumulate year after year. We've estimated $6.5 million in operating expense savings in the year 2016, and we'll continue to accumulate those savings going forward. So very proud of that result, and we've received great recognition for that from our stakeholders. And to dive a little bit into, okay, that's at the portfolio level. If we advance to the next slide, I'd like to do a couple of case studies on two buildings that we own. We're just going to call them Building A and Building B. So Building A, this is a snapshot of performance metrics. Baseline you can see as 2008. And as of most current period, September 2017. Actually, I guess that's not the most current period. This slide's a little bit dated. I apologize, it's not updated, but you can see that the Energy Star has moved from 82 to 97. It's a pretty significant change. And if you look at the change in source energy use and site energy use intensity, in percentage terms, we're talking about roughly 30% reduction in energy performance. So back to that earlier slide about our portfolio level, this particular building's outperformed the portfolio. And keep in mind that energy costs are increasing over this time period. So we roughly about 30%. So when you factor that out, where we would be sitting had we done nothing, our energy bills would be 30% higher than they were in 2008, I should say. But if you look at the energy cost featured here in this table, we're really trending along the same of where we were at in 2008. And so that avoided cost is huge. And when you apply a cap rate to that, assuming you were planning to sell this asset, it really translates into millions of dollars of value add to the property as a result of that consistent benchmarking and tracking of performance. So if we then slide to the next slide, so if building A was our star performer, building B is one that started from a point of underperformance. And what we were able to do here is, again, establish that baseline, provide the team at the property with, okay, here's where you're at, and let's set a goal of achieving Energy Star certification for this property. And so we've been working on that for nearly 10 years now. And you can see that as of last fall, we were at 74. I think we're still at 74 for this building, but we're in spitting distance of Energy Star certification, which is really dramatic. To go from kind of being in the bottom of the barrel to being really close to Energy Star certification is fantastic. And you can see in terms of energy cost, we've actually reduced the cost that this building is paying on an annual basis for energy by over 50%. So just a couple of case studies with you there. And for folks who may not be familiar, there's a performance reason to be tracking and benchmarking buildings, but there's also a regulatory requirement in many of the markets that we operate in. I think Shorenstein is subject to energy disclosure in 13 cities and water disclosure in 2 or 3 cities. So it is not only performance, keeping up with the Joneses and you know, being ahead of the building next door, but it's also a regulatory requirement these days. So to what was being said earlier about data quality by Tim and Matt, it's very important for us to be disclosing accurate data to these municipal jurisdictions that are asking for it.
Jaxon, this is Matt. A question came in that I think this could be a good time for you to speak to, which was basically, are you getting whole building data? So this issue of data quality is, are we seeing the totality of the building here? When you compile your numbers, did you have to do things inside the building to get that whole building visibility?
Yeah, that's a good question. So whole building data can be a tricky one. In certain markets, the utility companies have usually been dragged along, but have been willing to provide a method to collect whole building data. So it's one point of access to get the whole building data. In other markets, it's a little more nuanced. And both on the energy and particularly on the water side, where you may have tenants who have their own water meters, it can be a real challenge to collect that whole building information. Now, in the case of both A and B here, yes, we are looking at the whole building. But it's a good point to make that benchmarking best practice is to include the whole building. So if you have retail tenants, say, or if you're in a multifamily environment, it's not very meaningful if you're only capturing base building usage, but you're not capturing the usage of tenants in the building. And we could spend a whole nother webinar talking about whole building data. So I'll try to hold my thoughts off there and just to say that it is important and it is a challenge. And hopefully we'll continue to see in the market better solutions come along to addressing that whole building challenge.
It's a great, I love that question and the different tactics people have gone, but as an issue of data quality, there is a concept. Jackson's next slide, I think, talks about GRES, the Global Real Estate Sustainability Benchmark, which is essentially a ratings agency for portfolios of real estate. I'm sure plenty of folks on the call are familiar with. They have a statistic, and they call it data coverage, right? And that statistic is essentially a question of how much of your total floor area are you telling us about? It's really what it comes down to. And based on your asset class, office, you're going to see relatively high rates, 80s, 90% coverage rates because of the nature of the lease. And in industrial, logistics facilities, and retail, and certainly multifamily, you would expect to see very, very low rates of data coverage. In other words, the owners don't see that. As a data quality issue, I think it's fascinating, right? Which is we're only able to tell about or see and have visibility into portions of the asset, and that means we may not be able to do and take action that we otherwise might, right? Because we think it's for all intents and purposes, the asset's doing great, except we're only seeing 10 or 20% of it, the common areas, for example, right? So that's that issue we talked about earlier, completeness. We want to have complete visibility into the whole asset. In this case, the nature of Jackson's portfolio and the techniques he's used, he tends to have great visibility, but it didn't come for free and it didn't come overnight. It was a tactic and an effort that he had to lead.
Yep.
Go ahead, keep rolling, Jackson.
Great. So, and thanks for touching on the GRESB assessment and to build on that. So, talked a little bit about kind of where we've been, and I want to share in the last 2 or 3 minutes here, where we seem to be going in terms of data quality and providing that level of assurance when we are making disclosures that the data is accurate. So we've started to do some internal thinking. I can't share a whole lot, and in the interest of time, I won't go into it too deeply, but thinking about assurance and are we ready for the point in time in the future where an external party may need to review this sustainability data the way that financial data is assured, audited by accountants. And what are the standards that would be referenced? Is it GRESB? There's also the Sustainability Accounting Standards Board. There's the Global Reporting Initiative. So kind of an alphabet soup of reporting standards that may apply. And then from an internal standpoint, what are the controls that we have in place? Do we have an inventory of all the data points that are being gathered, all of the responsible parties for ensuring the quality of that data, rolling from the utility bill all the way up to the disclosure? So if we move on to the next slide, and I think I just have 2 more. So one step we did take last year was to conduct an internal audit of the utility data, energy and water, flowing into Energy Star. And so out of our entire portfolio, we selected 20 buildings to audit. And we looked at the utility data for the past 12 months for all of the accounts for those 20 buildings. And as one would expect with this data that is as what was the word Matt used earlier? Messy or
yeah, noisy.
Noisy.
I call it.
Yeah, that's as noisy as utility data can be. There were a few discrepancies in there. We identified 19 out of that full data set, and we're talking about hundreds of data points. But in most cases, these were small discrepancies. We may have had a calculation on the cost component that didn't include the tax amount or some other small discrepancies, but ultimately we were able to determine. We worked with our internal controller, accounting controller, on this. We were able to determine that there were no material impacts on the quality of the Energy Star data. And so that was a big finding for us, and it gave us a level of internal assurance around the quality of the data. So then jump into the last slide.
Jackson, if I could make one point on that, this is a great exercise. I would like to call this a best practice. Tim mentioned sampling of data. Jaxon actually did it, right? And he wanted to understand the before and after. What is the reality of underlying data quality moving from a manual environment or a more manual environment to a more automated environment? The answer wasn't perfection, by the way. And nobody in the market should be talking about perfection, but what we can be talking about is substantial and material improvements between the old and the new approaches or techniques. That is, I think, one thing to be very clear on, is not to oversell that technology and automation are a panacea. They're not. When I was at CBRE, the exact same case study of this is we had a vast portfolio. We sampled and looked at, this is many years ago now, but the property managers, and they're putting this data into EPA Energy Star, typing it in. So the question was, how well are we doing at that? Is it A, getting in on time, and B, when it does go in, is it accurate? I will not share the statistic that we came up with, but nobody on this call would be happy with it, okay? And when you look at that manual world and what Jaxon has just demonstrated here, that is a big sea change in the veracity and quality and actionability of information in real estate.
Great. So just to bring it home here, one last point, the GRESB assessment is probably the most widely used standard for sustainability ESG disclosure in the real estate industry. And we've been trending, one question in particular that I think is really relevant to this discussion we've had today, and giving some foresight on where things may be going to that external review point. There are a number of GRESB peers, and that number has been ticking up over the course of the last several years, who are engaging third parties to review their annual sustainability disclosures. Now, those sustainability disclosures come in different forms. Some folks do a sustainability report. Others may provide smaller brochures or may just provide their GRESB assessment. So it's hard to tell exactly how similar the apples are that we're comparing here. But it is worth noting that a significant number of real estate participants are choosing to independently review their sustainability disclosures. So with that, Matt, I'm going to turn it back to you, let you wrap this up for us. So thanks a lot for having me on.
Jaxon, thank you. Tim, thank you. We've got more questions than we can get through, obviously, here in 5 minutes. So I think what we'll try to do is bring some closure. We talked about a data chain of custody. We talked about procuring data upfront, and in particular, the lifeblood of an ESG system, the utility data, cost, consumption in our buildings. We talked about the good, the bad, the ugly of that, and a reasonable expectation is that using modern techniques and automation, we can improve that. Jaxon showed us that that's possible. And the implications around how we share this information with our folks who are turning wrenches in buildings. Are we telling them to go to the places that matter in the building? And are we doing that in a timely fashion? At the portfolio level, are we achieving carbon reduction goals? Is that reduction that Jaxon is pointing to genuine, and do we have confidence? We want to have high confidence in the outcomes we're communicating internally to management, to our executives, and then we turn to the wild west frontier of everybody else, the people outside our organization, our investors, our shareholders, if we're public REITs, for example. That is where the market is very dynamic. The data and the quality of the claims that we're making are being investigated now in a way they just were not before. If we make statements and claims that are not defensible in our sustainability reports, which are increasingly, to Jackson's point, these disclosures are increasingly regulated. They're looked at with a much more critical eye by the lenders and insurers who are ready and desire to move real money based on sustainability claims and merits. They need to rely on the authenticity and veracity. My sense of it, and maybe a parting question for you, Jaxon, to finish this off here is, do you think we're at a place where investors, lenders, insurers, people outside your organization, or occupiers for that matter, are really making a change in decision based on the sustainable information you're providing? Final sort of thoughts on that.
Yeah, that's a great question. That's the $1 million question, the sustainability rule, right? I would respond to that by saying that sustainability has continued to become more and more important to executives, decision makers within real estate organizations. And that's been my perception since coming into this industry 6 years ago. And I expect that we're going to continue to see that trend.
Good. Thank you, Jaxon. Thank you. We're hitting the top of the hour. Remember, as we wrap, fully recorded will be shortly made available online. We really appreciate your thought, your comments, good, bad, or indifferent, on how helpful this content was, and your contributions to the blogs and the content we'll post, so that everybody in the industry can learn and share and improve around data quality, whether you're in the business like Tim of procuring it, Jaxon of using it, or us at Measurabl sitting in the middle and trying to make it make sense and be as valuable as possible. So thank you, everybody, for being here today, Jaxon, Tim, and our audience. With that, we'll close up the webinar and wish you a great Friday.